Hello, beautiful people. Welcome to Baltimore Innovation Week's presentation on Investment Crowdfunding 101. My name is Samson Williams. I'm a partner over at Milky Way Economy, and we are the lead investor into Bright.us investment crowdfunding done Bright. And I give you this disclaimer so that you know that anything I say about Bright.us is biased, because I really believe in the mission they're trying to accomplish as a FINRA-approved crowdfunding portal. And on that note, and with no further ado, I'm going to introduce you to Jake Hartigan. I keep messing up your last name, Jake. Sorry about that.
No, it's common.
Awesome. So Jake, what do you do at Bright.us?
I'm the Chief Marketing Officer, basically in charge of the outreach to prospective businesses, as well as helping with onboarding and streamlining the user experience for Bright's platform.
Awesome. So very quickly, Jake, can you just set the stage? What is investment crowdfunding, and why do businesses and entrepreneurs need to know about it?
Yeah, I mean, you need to know your options. Investment crowdfunding is definitely newer, as of about 5.5 years ago, based on the JOBS Act. And previously, before that, you had debt and equity in the traditional sense through public markets, and then private equity and debt through like local banks or venture capital. With loans and equity being exchanged, there was limitations set to protect small investors from predatory businesses. That's changed thanks to a widespread share of information and the almost definite necessity to help small investors be able to contribute to growing businesses, as the world of technology has shown that even a small fish in a large pond can make a big dip. So being able to help small investors and businesses, they created the JOBS Act, allowing everyday investors, retail investors who maybe don't qualify to be accredited, which is over a certain threshold of annual cash, to be able to invest in these small businesses or startups before they go public. So it's kind of, you could think of it as a mini IPO. I think best similar industry or example is like the Kickstarters of the world, where you can get prizes. In the case of like Bright.us, we're able to offer for businesses to exchange equity or ownership in their business, as well as debt, basically offering a bond or a loan to small investors.
Okay, so now that we know that businesses can get a loan or an investment via equity in their business, I see about a dozen or so folks here on the call, explain to them what this actually means in real world. Can you walk it through? How does a company engage or launch a crowdfunding campaign, an investment crowdfunding campaign?
Yeah, there are several steps to it as far as the actual process, but at a high level, you have to go through a regulated portal. So a crowd investment portal like Bright.us, there are about 60 or so that have applied. I know about 50 or so that have been approved so far through FINRA. This is a very controlled industry, so it's designed to still protect those small investors from bad actors. But if you're a business that is looking to raise funds, you would approach one of these portals. You would go through your pitch deck and fill out through the portal Form C for FINRA's and the SEC's approval to be able to issue shares or loans or debt in the business from the portal itself.
Mm-hmm. Okay, so I'm going to drill down just a little bit deeper.
Sure.
I'm reading Stephanie's comments here about free business supports for folks in Maryland and in Baltimore. So let's just take a hypothetical. So it's completely hypothetical, make-believe company. So it's Samson's Brewery. And Samson's Brewery, one, can a brewing company use investment crowdfunding?
Yeah, as long as they follow the rules. They're welcome to bring in capital to their business to help it grow, expand, or basically welcome the community to be part owners of that business.
Okay, so on that line of thought, are there any businesses that can't use investment crowdfunding?
That's a good question. Fake businesses would not be qualifying. You have to have a legitimate business. You have to have a valid US-based business. So you have to be within the United States to be able to use these portals. Other countries and other districts of those countries have their own regulation. Similar to even our states, individual states might have additional measures that restrict who is allowed to actually run campaigns. We saw this at the beginning of the JOBS Act coming into effect with, like, let's say cannabis, where nationally it's not considered legal. So there were a lot of constraints and ultimately stopped a lot of those campaigns from going live across all of the 50 states. But a lot of this has been opened up, let's say for international investment, where you can, if you're a US-based business, collect investment from not only all of the US, if you go through our portal, you'd select all of them, but also under Regulation X, international investment from anywhere in the world, they're allowed to contribute to you. If you're a business that's based outside of the US, unless you have a entity that's established and built in the US, you wouldn't be able to use these from at least the US FINRA regulated standpoint. You'd have to go through either a local version of that. I know we have connections, both you and I, to, let's say, the Emirates, where they have their own systems broken out based on their districts, and they have their own set of guidelines and rules.
Mm-hmm. Okay, so now that I understand, any type of business can potentially raise money on a funding portal via investment crowdfunding. I want to take Jim's question. He says, what kind of track record, years revenue, would a business need before pursuing a debt or equity offering?
That's a great question. I think it does depend on which industry you're in and who your potential investors would be. In a lot of cases, you would need some level of experience, expertise, just to be able to offer something that investors would accept. And this is just from a mere sentiment point of view. You might legally be able to raise funds having, very little traction as far as the business itself, because there is so much that comes into different business lines, let's say deep tech, or a lot of upfront investment from an invention or a product design that would require a lot of capital right off the bat, where a lot of investors would probably want to commit that to your funding, and you wouldn't have a long history or track record to prove behind that. You could do it, but you would want to show a lot of effort or even personal investment into the business to be able to actually get enough investment from those retail investors. So it is a little bit of a balance between, yes, you might qualify, but also how much does the value of what you're doing convey to investors that they're willing to risk their investment. And they do consider it. It's not a donation. It is definitely a thorough process that we go through, as well as the investors, to ensure that this is a legitimate offer and that it actually does have a potential to return. So it's a bit of a flexible answer there. It depends on exactly what you're trying to do, but it could be very little experience with a high upfront cost, or you might have tons of experience and only need a portion of funds to get going. And both would be a valid example.
Thanks.
Yeah, no problem, Jim. And if there's any other specific questions, feel free to email me. I'd be happy to answer in detail.
So talking about specific questions. Oh, Jake, don't forget, I encourage you to drop your email address back into the chat for Jim in case he didn't catch it earlier.
Sure.
My next question for you is, we're talking about raising money, but how much can a company potentially raise using investment crowdfunding?
So through regulation crowdfunding, Reg CF, you have the new limit as of March 15th up to $5 million. So you could list your campaign, you can cash out early if you wanted to, but the limit, that maximum you can raise up to, is 5 million.
Is that 5 million a one-time raise, or can they raise it every month, every week? What are the limits on that?
It's a great question. It's once a year. So once every 12 months, you are able to run a campaign to raise funds. So it's often seen where you might run a first campaign and then following year raise another one once you've hit certain milestones from the first round of investment.
Mm-hmm. Excellent. So I just want to very briefly summarize these points because we've been talking about it. So I'm going to read my notes to make sure I get this right. Any business, any legal business can use crowdfunding to raise money for their legal business. You want to have some type of track record when you go to raise these funds, because your offering must be attractive to investors. Most of your investors, the majority of your investors in Reg CF or regulation crowdfunding will be retail investors, and you can raise up to $5 million. Do you have to raise up to $5 million? Do you have to raise the whole $5 million?
No, and I would actually encourage not to if you really don't need it. You really want to raise just what you need and maybe a small buffer to account for uncertain factors that could potentially cause issues in the use of those funds to make sure that the business succeeds. You wouldn't want to have to be in a situation where you need to raise a small amount of funds shortly after. But at the same time, as a small business and a startup, you tend to want to hold most of the ownership and equity that you can. And your valuation level is probably not going to be much higher than that 5 million, especially when you're first starting or even after the first couple years potentially. So you really should consider not raising up to the maximum, but what you need is really what you should go for. I know with certain industries that 5 million is what is needed to be able to actually accomplish their goal, especially in, let's say, commercial real estate space. Or I know film and other industries that are labor intensive could also potentially hit that limit. But generally speaking, you want to hit just enough as your target goal to be able to accomplish getting off the ground and successfully generating cash flow and revenue to operate the business before the next round of fundraising or to continue on in perpetuity.
Okay, so we're having a chat with Jake from Bright.us, FINRA approved crowdfunding portal. And so we've talked about many of the basics, and I just want to do a hypothetical as I'm looking at Brian's image, and he's running, and he looks like he's at a gym. So we're gonna hypothetically raise, let's say $500,000 for Brian's gym, to launch Brian's gym. The question when we go to raise $500,000 using crowdfunding, what is the cost of the raise and how long does that take?
Also good questions. The cost of raising funds depends on which portal you're using, the cost of marketing and other expenses to build awareness for the fact that you are raising funds. And depending on what area of fundraising you're going through, that also might increase or decrease the amount of cost in raising funding. For, let's say, in the example in our case, Bright US, the only fundraising expense that we offer from our platform specifically is the 5% after you've raised funds. So you can be applying, going through the process of running a campaign, successfully hit your fundraising goal, and only once the cash has been sent through your accounts do we actually process that 5% fee. There are partners that we have that will process for escrow payments and ACH and all the other background checks that are associated with being approved. But you could budget within $1,000 to $2,000 comfortably to be able to get off the ground from a legal standpoint. Now, we both know, Samson, one thing is being legal, the other is being realistic and successful in that. And you should definitely estimate that if you have to raise funds, you're going to have to build awareness. If you don't already have a following, I would budget, several $1,000s to be able to campaign and market your offering. You can do this through, social media. You could do this through pay-per-click advertising. You could do a whole lot of options as long as you're following regulation by FINRA for communications about an investment. But these are definitely things you want to consider in your budget. Now, the best situation is you have hundreds of thousands of followers and you have an audience ready to go. And all you just have to do is send out an email to let them know that it's time to actually invest and that you actually have an approved campaign and are allowed to do so.
Mm-hmm. So we see Steadily just asked the question, are there different types of crowdfunding? I'm going to say very briefly that the types of crowdfunding are donations and rewards. We're not talking about those today. We're talking about investment crowdfunding. And underneath investment crowdfunding falls debt, also known as getting a loan or generating a loan, as well as equity and royalties. So equity crowdfunding, if you've ever watched Shark Tank, it's very similar, but you have to put all of your information on a funding portal like Bright.us, and then the crowd, in this instance, your sharks is everyone who goes to the funding portal. Want to keep in mind, Jake pointed out something very important. You do have to drive traffic and awareness to your particular deal. So that's going to be a sunk cost. And Studley, just to be sure, I want to just repeat this, that, or rather state this, your business needs to be business ready, meaning you're an actual legitimate business. To Jim's question earlier, you should have some traction, either sales, revenue, or community. And then when you go from business ready, that's a sunk cost just to start your business. Then you're talking about getting platform ready. This is where Jake was talking about the different legal forms, the compliance forms that you file with the SEC and FINRA that make your business platform ready. And then your business can determine, rather, potential investors will determine if you're investor ready when your deal goes live. So just want to be clear on that first. And so talking about your investors determining if your deal is investor ready, why would founders or businesses, again, any legal business can create a crowdfunding campaign? They should have a track record. They can raise up to $5 million. They probably don't want to, but rather, not that they don't want to, but you should only raise as much as you need, as much as your business actually needs to grow. But why would businesses choose crowdfunding over venture capital or VC funding?
I mean, there are so many. It's pretty incredible. One is that this is kind of a newer option, and it's designed specifically for the advantages that it brings. You're having not only your customers be able to get awareness of this, but investors who might very well be your customers. So they're the same people that believe in your product or service. They're likely the ones to buy it and advocate for it. In this case, you're actually welcoming your best and most advocating customers to be part owners of your business, and to basically become fully vested in you and what you're doing. So that's one major aspect. In venture capital or other types of private equity, there's typically 1 to 2 individuals that you're working with, and they expect massive returns based on that investment, and they're there to make as much as possible. It's not to say that that's not true for crowd investment, but you have a lot more leniency as far as the audience, the crowd believes in you in the long run. They're not there to make a quick return. They're there to see your success and make a return over time. It's not a quick win necessarily. It's going to take multiple rounds of fundraising or many years to develop a successful business that they're invested in. Yeah, and then the cost of fundraising itself. If you're flying all over the country trying to meet individuals for venture capital and trying to pitch them continuously, you have to think about your time and what it's worth versus going through the application process once to reach thousands of investors, including venture capitalists who are also participating in these deals because it's a good deal. They're not going to be able to negotiate, which they usually do, like you've seen it on Shark Tank or other venture capital shows or other events where they have the kind of negotiation power to sway for a better deal. In this case, it's on your terms. You set the terms of the deal. The crowd gets to decide if it's worth it or not. And you have the buy-in and the discussion across many people who are talking about it and sharing it with others, helping you get to market faster by reaching your audience, the customer, as well as anyone they talk to about it. So there's a lot of, I guess, those initial costs that would normally be spent towards marketing and building awareness that you have to do anyway to build a successful business. In this case, it's not only driving customers, it's driving investment to help that cycle continue.
Mm-hmm. I love it. I love it. And just remember, I like to tell folks, if you're in a Shark Tank, you're on the menu. So whenever you go to engage sharks, just keep in mind you're on the menu, and you might want to engage in the crowdfunding because you do get to set the terms. So that you can actually keep more of your business as opposed to giving up to sharks. But Studley had a question. What are some of the best practices to drive consistent traffic to a campaign?
Yep, I was just messaging. But the ways you can market and drive traffic depend on the business itself. If you're in commercial real estate and looking to raise capital for commercial deals, commercial real estate deals, there are tons of investment groups and forums that are dedicated specifically to real estate investment. Those are probably your best channels to find the most related and most interested audience. And it all comes down to that. That was just one example, but whatever your business is, there's a targeted audience that is probably already looking for these things. Like venture capitalists who are going to crowdfunding platforms to look for deals that are in their portfolio that they're looking to add. Same thing with retail investors. These are tech startups. They're probably people who buy technology who look to invest in new technology. Just in the public markets, they're probably also looking the same for crowd investment. And depending on where they are and where they're looking to evaluate, that's the best direction that you'd want to market to. So if this is on Facebook or Instagram through social media, a lot of like B2C business models will probably go there. But if you're looking for more technical investors, like in commercial real estate, you don't necessarily see that as often through those. You'll have to go and find more detailed forums, more, I guess, investor focused channels of communication. So again, kind of a flexible answer. This is a very broad industry that we can welcome because it's any business in the US that's allowed to do it. But you definitely want to build and target those specific audiences that you believe are your best investor or most likely investor, and then work your way out from there.
Mm-hmm. I would just like to add, particularly because we've been talking to a lot of restaurantpreneurs, restaurant owners. 2020 sucked. It just did. Everyone knows that. You were unable to operate your business for, even if you're not in restaurants, you weren't able to operate your business anywhere from 6 to 10 months for a period. Investors actually know that you had a tough time last year too. So one of the best practices for marketing or driving traffic to your campaign is, one, set up a campaign. Two, tell your story, particularly in the restaurant business. We understand everything was closed for 10 months. And so if your numbers are down, if your numbers are off, everyone understands, even if you weren't in the restaurant business. But so long you're transparent and you just tell them, hey, we had a very profitable business and then it got shut down, everyone understands that. And people are far more, it's not that they're sympathetic, but there's empathy in the fact that your business couldn't open because of the pandemic, which is why now is such a great time to go out and launch a business and pursue and engage your customers as investors, because everyone is going back outside. We're getting back in the swing of things. And you'll see that if you, so long that you're transparent and you tell your story honestly, your potential investors can relate to you on that. Jake, did you have any other questions? We have about 6 or 7 minutes left. Do you have any other questions or comments that you'd like to talk to us about Bright.us?
I mean, tons. I could rant, as you know. But yeah, I just wanted to say that if you're looking for a platform that would be able to let you cost effectively raise funds for your own business, or someone who probably could do this as well and has a great idea, has a great business that they're running right now and are looking for that next step to launch and excel beyond maybe where their comfort zone is, we're definitely open to talking with them and would love to be able to learn about it. Yeah, Jim mentioned the investors.
Yeah, let me just interrupt you one moment. And can we talk a little bit about this term investors? I've been saying this, I stole it from a gentleman named Woody Neese.
I was going to say, I thought you coined it.
No, I'd say it. Woody Neese says this. So an investor is a customer who becomes an investor. And so often in your business, you probably already know what your lifetime value of your customer is, meaning, you sell gum. So you know how much gum I'm going to buy in my lifetime, or whatever your business happens to be. You know what that lifetime value of your customer is. Things get a little bit different, Studley and Jim, when we talk about an investor. If you know that your customer's lifetime value, let's just say it's $3,600 because they're going to buy $3,600 worth of gum for your industry. How much is that person's value when they become an investor? Because they're still going to be your customer, but now they're also going to be an investor. They're going to put the average investment for Q2 of 2021 was $776. And so if that customer is going to invest $776, how many more people are they going to refer to your business? How much more are they going to use your actual good product or service? How much more revenue will they generate? Revenue will always be the best capital in the world. And so that's the thing that you should keep in mind when you go to launch a crowdfunding campaign. You're not only giving your potential customers the opportunity to invest in your business, you're also giving them the opportunity to buy your good product or service. So, Jake, can you give us an example or some commentary around what happens when businesses not only raise money, but also generate income through the marketing that they engage in?
Yeah, definitely. I touched on it a bit earlier, and it has to do with that first upfront cost of being able to build awareness of your business, product, or service. And the costs are then distributed across not only the potential for them to invest, but also to hear about your product. And if they do invest, only accelerates almost like a flywheel the amount of advocates who are going to go out and talk about it. And that's one of the hardest parts in any business is creating that almost viral effect. Kind of a dirty word since 2020, saying viral, but that's what you want as far as business success. And it's hard to generate that through just typical advertising. The best way to figure out if someone likes a product is to hear how much they talk about it to somebody else. That's the number one source of truth for most people when making a decision on anything. And so if you get those types of advocates at scale who are all part owner of your business, the exponential benefit, like you mentioned, the lifetime value of that individual is exponentially higher than if they were just buying your product, just holding their Starbucks cup as they walk down the street. It's much more than that because they're going to be out there advocating and convincing people that this is the best thing because they're invested in it. Not only emotionally, but literally. So that's kind of a unique, like you mentioned, new change to the environment and how businesses run since the JOBS Act, and definitely now at a different scale thanks to some of the updates this year about how far this is going to reach and potentially continue to grow into the future as this becomes more and more normalized and systematized.
I agree. I've been loving the questions so far, and I just want to do a quick recap. Through crowdfunding, any business, any legal business can raise money via crowdfunding. You should have a track record, so either revenue, sales, community. You can raise up to $5 million. However, don't put that as your first goal. We recommend that you only raise what you actually need. If you don't need 5 million, if you only need 100,000, you should raise 100,000. You do need to get yourself business ready and then platform ready so that you can fill out, Jake mentioned your Form C. And then from that, you need to put your deal on a platform to go live. And as Studley said, you want to drive consistent traffic to your campaign so that your customers, your potential customers, and your potential investors can know that your deal is live so that they can invest in it. I know there's a lot more technical questions we didn't cover. Jake, as we're coming up on our time, we have 1 minute left. Give us the one thing that you want every potential issuer, every founder, every business person to know about crowdfunding.
The number one thing to know is that it's there because this is definitely new, but also that you're there to help the world at scale and right from the beginning. Having a strong reason or purpose behind your business is what makes this so valuable. It's no longer just the large corporations of the world who can tap into a large audience of investors. And that means that we have a kind of connected responsibility to make the world that much better. And having a reason to do that is what's going to make your business successful and also what's going to, drive the most interest from investors. So having that purpose really well defined and the value behind what you do really clearly identified will make not only your, successful crowdfunding much easier, but the success of your business and the success of the world as a whole. And hopefully it'll be a lot brighter in the future.
Awesome. So thank you everyone for joining us on this session here at Baltimore Innovation Week. Jake is going to, if you send Jake an email, he's going to provide you with a checklist. It's like 10 things that you need to engage in for crowdfunding. And so his email is there in the chat. It's Jake.H@bright.us. And so if you shoot him that email, he'll send you a checklist. That way you can get an idea of, oh, here's what I need to get started or to be considering if I'm looking at raising money for my business via investment crowdfunding. That's it for the moment. Thanks for joining us. Have an awesome week. See you guys later.
Thank you, Jim. And thank you, Samson.
All right. Bye-bye.
Talk to you later.